welcome back from break. Before we move forward with our next presentation, I spoke with Debbie at break and she wanted me to clarify one of the questions that she responded to. And the question was, is income exactly 20% ownership eligible for the deduction? Yes, 20% or greater is eligible, less than 20% is not. And we apologize for the confusion. And at this time, we're going to go ahead and move forward with our program. And I'm going to introduce our next presenters, Loretta Hall, Deborah Day, and Laura Stanley, who will be talking about employer withholding, employment services, and employment placement services.
Good morning. I'm Loretta Hall with the Employment Tax Division, and I'm going to go over a few items for employer withholding taxes. We will start with the basics of employer withholding taxes, and then electronic filing requirements, professional employer organizations, issues, and future items. First, we have the basics. Who is required to withhold? Every employer maintaining an office or transacting business in the state of Ohio that pays compensation to an employee, resident or non-resident, is required to withhold. Compensation to employees working out of their homes in Ohio is subject to withholding. This is considered transacting business in the state of Ohio. Also, employers are required to withhold school district withholding taxes from any employee living in a taxing school district. And you can find that out by what the employee puts on their I-T4 as well as on our tax finder. Exceptions to withholding. Compensation paid for services provided in a domestic home, such as nannies and housekeepers, are not required to withhold. However, you can do so on a voluntary basis, and if the employee makes a request for the withholding. Also, an exception to withholding are independent contractors as well as some agricultural labor workers. And you'll want to refer to the U.S. Code 26 for that information. Registration. Registration is required within 15 days of the date the withholding liability begins. Our Form IT-1 application for registration as an Ohio withholding agent can be submitted 3 ways. One is through the Ohio Business Gateway online, and also telephone registration by calling our toll-free number, and an agent will assist you through that process. Or you can mail in the paper form to the address on the form. This is a snapshot of our Ohio Business Gateway registration page. As you can see, it takes you line by line, and it will just take you through each screen. At the end, you'll get a confirmation notice as well as your assigned account number. And this is our paper IT-1. The section circled is where you would let us know your estimated amount of withholding for that year. And that's important to know for our next section. Filing frequency and forms. Filing frequency for a new account will default to quarterly if the estimated withholding amount is unknown, as I was showing you on the previous slide. The filing frequency is reviewed annually, however, and may change based on the amount of withholding remitted during the look-back period. Now, the look-back period is a 12-month period ending June 30th of the previous calendar year. Employers will be notified by mail if a filing frequency has changed, and also your filing frequency will be updated on the Ohio Business Gateway. All filing frequency due dates can be found on our website. If you click that link, you could go out to all of our withholding information. It'll give you the due dates for quarterly, monthly, as well as the part weekly filing frequencies. Our quarterly employers, these are our employers who will remit $2,000 or less combined withholding state and school district for the year. You'll use the Form IT-501, which is due the last day of the month following the end of the quarter. And our monthly employers will remit more than $2,000 but less than $84,000 combined state and school district withholding. And the due date of that form is 15 days following the close of each month. And our Part Weekly filers, they remit more than 84,000 Ohio withholding. And this does not include school district withholding. They are required to file EFT. This participation, you would register through the state treasurer's office, and you have 2 Part Weekly periods. The due dates are 3 banking days after the close of the period. Any single period with $100,000 or more, excluding the school district withholding, must deposit by the next banking day using the EFT. School district filing frequencies are monthly and quarterly only. Part Weekly does not apply. Quarterly is the same as the state withholding, 2,000 or less combined state and school district withholding tax. Your form is the SD 101, also due the last day of the month following the close of the quarter. And your monthly is more than 2,000 combined employer withholding and school district tax. The form SD 101 is then due 15 days following the close of each month. We have 3 annual forms. 2 of them are for state withholding, the IT 941 and the IT 942. Your IT 941 is used by the quarterly and monthly employers, due by January 31st of the next calendar year. The IT 942 is used by our EFT employers only. It is the 4th quarter and annual reconciliation. It is due by January 31st of the next calendar year and is no longer available in a paper form on our website. However, the payroll providers have access to that paper form, but with our electronic filing requirements, it should be submitted electronically. And the SD 101 is for school district withholding only, also due by January 31st of the next calendar year. Other forms you want to remember, the IT3, transmittal of wage and tax statement. It is an information form only, due by the last day of February following the calendar year, or within 60 days of discontinuing your business. If you're closing business, you'll want to send that in within 60 days, along with your IT 941 or 942, and send the wage and transmittal statement, sorry about that, with your W-2 and your 1099 statements on the CD-ROM. Please do not remit any payment with this form. It is information only. Do not remit any payment. And you'll also want to recognize your IT-4, this is the extension certificate, and your IT-4NR, which is the employer statement of residency in a reciprocal state. So the states bordering our state, if you have Ohio employees crossing the border to work, you do not need to withhold for them, and you want to have this form in your file. The ITWHC is a change of name, address, and status. You close your business, you not only want to send that wage and tax statement, you want to send this form in also. And this is just a snapshot of our form screen on our website and the IT3. And the circled part reminds you to not send any payment with this information form. Electronic filing requirements. As most of you already know, Rule 5703-7-19, all employer withholding and school district employee withholding taxpayers must file and pay electronically. This was effective November 13th, 2014. Quarterly and monthly filers will file their state withholding as well as their school district withholding through the Ohio Business Gateway. And our Part Weekly employers are required to do EFT submission through the Treasurer of State. However, their IT 942 4th quarter annual reconciliation will be submitted through the Ohio Business Gateway. The link will take you to the Treasurer of State site, give you all of the information on what you need to do to set up your account for EFT submission and any other information you need about that program. Payroll providers. Our payroll providers are now required to do bulk file upload through the Ohio Business Gateway. This link will give you all of the technical information on how to make that a smooth transmission. So definitely, if you're a payroll provider, you want to read through that information thoroughly. And professional employer organizations, PEO, as described by our ORC 5125.01. It is a sole proprietor, partnership, association, limited liability company, or corporation that enters into an agreement with one or more client employers for the purpose of co-employing all or part of the client employer's workforce at the client employer's work site. That is to say, the PEO will become the employer of record. The PEO is required to register as an agent using our IT-1, using the FEIN of the PEO, the Federal Employer Identification Number. They are required to withhold state and school district on behalf of the employees, and required to follow our electronic filing standards. This link will take you to the PEO reporting information, let you know when you need to submit your initial filing with us, how often you need to update your list of clients, and when you need to make changes to your client list. Now we're going to move to our issues. Our first issue is EFT incorrect payroll date. The payroll date is the due date of the period being filed, not the last day of the period being filed. Using the last day of the period as the due date causes the forms to stack on top of each other in the same period until it's changed by either the employer or the payroll provider. This will cause the employer to eventually be billed for interest and late fees. Say your date is, your end of the period date is September 30th, and you keep using September 30th as the payroll date. By the time you get to October or November and you're still doing it in December and January, all of these items are now considered late. You are accruing interest and eventually late fees and will be billed. The payroll date must be changed with each EFT submission. Another issue is an incomplete IT 942, the Ohio Employers Fourth Quarter Annual Reconciliation. This causes delays in processing your form if they are not completed in full. It may cause the employer withholding account to appear out of balance also. The most common lines that are not completed, line 5, total income withheld for the previous 3 quarters, and line 7, previous payments. If these items are not completed, your account will either look grossly overpaid and will have to be reviewed for correction, or it may look severely underpaid and you could receive a bill in error. So you want to complete everything on the form. And this is a snapshot of that form. The top section is for the fourth quarter information. So you want to complete everything and then complete each line item in order for your form to process correctly. Another issue are credits. The credit carry forward line is no longer an option on our annual reconciliations, the IT 941, IT 942, or SD 141. All overpayments must be requested as a refund on the annual reconciliation forms. Employers and payroll providers will be notified by the department if there are any unrequested credits on the employer withholding and school district accounts. Please reply to this notice with the requested documentation so that we can verify that the credit is valid to your account. If the credit is found to be valid, it will be released as a refund. Again, there are no credit carry forward lines available, so it will be released as a refund. And another issue actually are refunds. Refunds, again, should be requested on the annual getting familiar with those numbers now, the IT 941, IT 942, and the SD 141. Refunds are not issued from the quarterly, monthly, or weekly periods. If there is any erroneous payment that may cause a company hardship, that can be requested in writing. The account will be reviewed, and if that hardship is found to be valid, we would release that as a refund. Oh, also, we have our WTAR, which is the application for Employer Withholding Tax refund. It's used for illegal and erroneous assessment, as well as the hardship. Do not use this form for refunds that are or should be requested on the annual reconciliation. So if you have, where you're reconciling each period, your books, and you see $5 overpaid here, $10 there, $20 there. We will not reconcile each period and issue those refunds. Those are to be reconciled on the annual reconciliation. And this is a snapshot of our IT 941 as seen on the Ohio Business Gateway. As you can see, there's a refund line. There is no credit carried forward line. You want to complete each period thoroughly and request the refund on this form. And this is the IT 942, which is a combination of the fourth quarter and annual reconciliation for the EFT filers only. And as you can see, the refund request line is available. The top portion, again, is for your fourth quarter information, so you want to complete everything on the page. And this is our SD 141 school district annual reconciliation. Again, used for making any changes to the school district. If you have a school district that was underpaid or overpaid in error, this is where you would make that change, remit any additional payments necessary, or request a refund. And the WTAR, the application for withholding refund. The portion circled is where you would enter your illegal or erroneous assessment or your hardship payment that was made in error. And again, that is something reviewed each case. If you're only doing $200 a quarter and you accidentally push too many zeros and you sent us $20,000, yes, we will take that, look at the account, and issue the refund. Future items. Proposed Rule 57037-19 amendment to require electronic submission of employee information forms, such as the W-2, the 1099s, and the IT-3 has been delayed. But you want to keep an eye out for future information about that amendment. So in the meantime, the W-2 wage and tax statements are still required to be submitted on CD-ROM or other approved magnetic media if you are an employer with 250 or more statements. If you have less than the 250 requirement, you'll just need to keep those statements in your files for at least 4 years. And an IT-3 transmittal wage and tax statement. Currently, it is a paper form, and you'll mail that to OVTA using the address on the form, regardless of the number of W-2s and 1099s that you have. So if you only have one employee or you have 1,000 employees, you still need to send that form. And again, do not remit any payment with this form. We're going to pause for the code word, and your code word is reconciliation. All right, now we're at our resource page. If you need any help, please contact us. You can send us an email. You can get help looking at our FAQs, the finder, the forms, the information releases, as well as our email alerts. If you are not signed up for the email alert, please sign up for the email alert. That would be definitely helpful to you. You can keep up to date on our changes, upcoming changes, and new requirements. And this is our contact information. Contact us by our toll-free number, send a fax, or mail your correspondence as well as email. Thank you for your time today, and I will turn it over to Laura Stanley.
Good morning, almost afternoon now. My name is Laura Stanley, and I'm the current counsel for the Sales and Use Tax for the department. Today, Deborah Day, a senior auditor, and I will be covering the taxability of employment services and employment placement services. Some things we're going to go over today. I'm going to discuss the basic definitions of employment services and employment placement services, what is included in the taxable base, and the sourcing of these services. Deborah will then cover the remainder of the program, employment services exclusions, and some miscellaneous issues. Employment services, employment placement services, became a transaction subject to sales tax back in January of 1993. Since that date, the Ohio Board of Tax Appeals and the Ohio Supreme Court have on several occasions interpreted the definition of employment services or the exclusions that are available to it. It is those definitions, the statutory definitions, some relevant case law, and the department's application of this law through audit that Deborah and I will be discussing over the next half hour. So again, the definition of sale includes the providing of employment service and employment placement services. Employment placement is found in 5739.01 KK, and it can be any of the following. It can be securing employment for a person, finding an employee for an employer, or locating the position for a person. These are your common headhunter situations that you would normally think of. Employment services is found in 5739.01 JJ and has 5 exclusions, which Deborah will cover in detail later. But in general, it requires personnel provided or are provided on a temporary or long-term basis. They're provided under the supervision and control of another, and their wages, salary, or other compensation is being paid by the employment service provider. There are 2 cases that litigated this criteria. We won't go into too much detail of all of the case law today, but Moore Personnel Services, Inc. versus Zano was the first case that set forth the test that relied on the definition of the employment services that we discussed previously. Moore would provide its employees to its customers. However, they had little interaction with the actual interview or examination of the persons that were designated by those clients. The fact that Moore was providing or supplying the personnel was the issue of this case. Providing and supplying are not defined in the statute, so they're given their common meaning. Provide is to supply or furnish to use, and supply is to furnish with what is wanted. So applying these definitions, the court found that Moore was providing the taxable employment services. Another issue was Reed Ellsbury versus Zano. It was determined whether or not the tax commissioner needed to determine the true object of the service, or was it the activity of the creation of the lines of code or the employment services. In Reed, they provide computerized services to their subscribers and users. Reed's workforce, when it was insufficient, Reed obtained additional personnel from outside companies. The court relied on Belmar Parts versus Tracy, and they stated that the benefit of the flexible workforce, in addition to the actual development of the application software, was the benefit being received by Reed, and it was considered an employment service. So these seem like similar activities or similar definitions, but they are kind of different. Employment placement services has no exclusions, and employment services has 5 exclusions. Regardless, though, under both services, if a customer cannot claim an exemption from the sales tax provided for in 5739.02, the service is considered taxable. So exemptions that are considered allowed are sales to churches, sales to a 501c3, or sales to a government or political subdivision. Next, I'm going to cover what's included in the price. So what you should be using to determine you're calculating your amount of your tax. The total amount billed by to the client for the employment service is considered the price, even though you may choose to separate some of the certain reimbursed costs, such as travel expenses or advertising fees. So I like to do a presentation and do a little bit of test your knowledge in there. But what I want to ask you to do is that these are just for your information. Try not to answer these through the webinar. They're not graded and they are not monitored. So the first one is manufacturer A hires EP company to screen for potential candidates to fill a CFO position. EP company charges the manufacturer the following: a $10,000 base, $1,000 for advertising costs that the EP company incurred, and $3,000 for travel expenses to bring 2 candidates to the manufacturer's facilities for interviews. What would be considered the taxable base? So in this scenario, the taxable price is considered the $14,000, or the total amount that was billed to the client. Something to keep in mind is that sometimes the price can be billed in parts. There are some situations where a base fee in an audit period will be outside the audit period, but the remaining fees for advertising or travel expenses will be included in the audit period. An auditor may review the activity that's happening here, will review all the types of activity, but they will only include in the audit what is necessary. The next test your knowledge. Manufacturer A utilizes ES company to provide a crane operator for 3 months. The daily rate is $15 an hour plus the 75 cents per mile of mileage that's incurred for the crane operator to travel between the locations. What is considered the taxable base? The total taxable price in this situation is the $15 per hour plus the mileage fee. Next, we're going to cover what is considered, when is the tax due. The tax is due when the performance of the service is provided, or invoiced, or when the price is paid, whichever occurs first. As discussed earlier, some of the contracts may be provided for payment of services in pieces. Therefore, if a retainer is due prior to the completion of the performance, the retainer is taxable when it's billed or paid, whichever is first. Something to keep in mind for the rate being charged: only the Ohio portion of the service is taxable. The rate will depend on the county where the client receives the benefit of the service, that is, where the employee is assigned for the client, or where the employee resides for the client. If you provide a placement for locations in more than one county, it's important to separate the placement charges so that each of the county is billed based on the appropriate rate. During the audit process, the auditor will look at the locations of the jobs that are associated with each of these services. Many times your sales journals will have the locations of the jobs, but there are also times when your invoices will only list the headquartered location and not necessarily the position placement. What's important is to make sure that the auditor knows these things ahead of time. You provide the contracts that are able to be reviewed, or the sales journals that prove the locations, so that the auditor doesn't include things in the audit period that doesn't need to be included. And again, another test your knowledge, please don't enter this into the webinar, just kind of something for you guys to think about. So pursuant to a contract, ES company located in Ohio provides personnel to 2 plants, one in Ohio and one in Pennsylvania. Where is this service sourced? And as I stated before, only the service that's located in Ohio is taxable for this situation. I am now going to turn over to Deborah Day to discuss the remainder of the presentation, all of the exclusions from employment placement, or employment services.
Thank you, Laura. Okay, everyone, we're at the 4th quarter. We'll probably take a time out for water because I've been sitting here anxious for a while and a little bit dry mouth. But let's push through, get to the end, talk about the exclusions that are found under Revised Code 5739-01, JJ1 through JJ5. I'm not going to state them here because we're going to go through them in great detail. However, one thing to note about the exclusions: if they are asserted by your customer or you are the consumer and believe you have one of these exclusions, they have to be affirmatively defended by you, which means you can't claim it and not in an audit situation provide any documentation. These have to be reviewed, documented, and supported by you as the consumer, or in the sales audit situation as the employment service provider or employment placement provider. What I will tell you here, and probably you'll see throughout the rest of this presentation, is document, document, document. The more information you have, the better your case will be. The first exclusion found under Revised Code 573901, JJ1, says that employment services are not taxable if you're acting as a contractor or a subcontractor. And this is the key factors with related to this exclusion. Is the transaction for the sale or purchase of qualified personnel that work under the direction of the customer, or is the transaction for the accomplishment of a specific task? Please note, skilled labor will not automatically qualify you for this exclusion. We have two cases that have litigated this exclusion, ETS Inc. v. Tracy and Crew for You Inc. v. Wilkins. Since we're getting close to the end and getting itchy, I'm not going to talk in too much detail, but they are cited here should you wish to go out and review them. So again, let's test your knowledge. Which one of the following is considered taxable employment services? Company A hires an electrician to wire a new office, or Company B hires an electrician to perform work under the direction of the plant manager. Pretty straightforward question for you. Company B is considered the taxable employment services. But we did throw in there that it is an electrician. I have seen this in real life as an auditor. I've also seen where taxpayers have used certified welders, hired by a manufacturing company to come in and work for the day. General carpenters, that have been hired by the general or sub to work at the job site for the day. I've also seen secretarial staff that can perform specific functions, and also IT personnel, which we have here in our room here helping us with the cameras, that will do software programming. You need to remember with this exclusion is what is the true object? And when we were working through this, we kind of questioned it, and I will tell you and interject here, there is an information release on employment services, and it is wonderful to read. It's got a lot of good information to help you. There are several examples in there, and what I garnered from it is, as the service provider, what are you contracted? What are you obligated to perform? Are you supplying personnel, or have you contracted to have a specific job completed? That's where having your contracts, statements of work, various information is going to help you. Because in both instances, you're providing labor, but what is the true object of that labor? Second exclusion under JJ2 in Revised Code 573901 speaks to those in the medical and healthcare services. The key factors for this exclusion are the personnel so provided professionally trained and licensed medical practitioners or others, and that's very key, do the above individuals provide patient care or otherwise have an active role in patient diagnosis, treatment, or care? Warning, personnel must provide the patient care. Otherwise, we would consider it taxable employment services. Some examples of qualified staff include your physicians and nurses, your technicians, medical assistants, nursing home assistants, pharmacists, your therapists, such as occupational, physical, respiratory. Examples of non-qualified personnel, right off the bat, would include clerical, secretarial, or accounting. Again, there are very good references and examples in the information releases out there for you. So let's test your knowledge again. And as Laura stated, please do not answer on the webinar. This is merely for your information and to give you an idea of what we look at as your department staff. Which of the following is considered taxable employment services? Anesthesiologist A is hired by a surgery center to perform anesthesia services on patients, or B, an anesthesiologist is hired by a surgery center to be the medical director of the facility. And we're going to take a quick time out so I can have a drink of water. anesthesiologist B would be considered your taxable employment services because they are not performing patient care. Now, I haven't seen this in real life here, but in my previous job, we did have medical directors at our facilities that were in charge of human resources, credentialing for the physicians, infection control, quality assurance, and we have a contract that stipulates such. In that case, we as a department or I as an auditor would determine that that is not meeting the exclusion under JJ2 and therefore would be deemed taxable. Now, I am going to give you a heads up here, not on your PowerPoint, however, that if the person or the doctor and not the company is invoiced and paid, that may impact the application of employment services and also the exclusion. What I mean by that is if Dr. Doe is invoiced instead of Doe Medical Inc., the auditor is going to ask, where's the contract? And at the end of the year, do you give Dr. Doe a 1099? Remember, employment services is personnel are being provided under the direction of another, and their wages and salaries are being paid by a third party. Now, I am going to state very clearly, a 1099 is not the only evidence to prove that you are billing an individual directly and you do not have employment services. It is one step in our audit process, one question we ask, and it is not the only factor for us allowing or denying this exclusion. The third exclusion, and I can't wait for us to all start asking questions about this because this is the most contentious one. This is one that has had several cases of litigation, is under JJ3 under Revised Code 573901. And it is the statement of permanent placement. The key factors for this are that the personnel must be provided pursuant to a contract of at least 1 year, and each employee covered under the contract is assigned to the purchaser on a permanent basis. Permanent basis has been litigated, and we define it to be that the personnel are intended to be assigned for an indefinite or unlimited period of time. Some additional key factors with regards to this exclusion under JJ3 is that the contract need not be written. It may be an oral contract. Your contract does not need to stipulate the number of staff, doesn't have to state their names. But however, we do need to know that there is permanent placement. We will be doing performance review should you be put under audit, i.e. we're going to be doing invoice review to complete that to ensure that all staff that have been provided from the employment service provider to the customer adhere to the contract. This has been stated since this started, is one bad apple can spoil the bunch. You can have 99 permanently placed employees that are always there. You have one that comes in as a temporary, and it can negate the entire contract. I have not seen it, but have worked with auditors where they will actually separate the contracts for those that are permanently placed versus those that are placed on a temporary basis. Again, in an auditing situation, I am going to ask for the contract, but the absence of one will not negate your exclusion. I am going to review that contract and read it. If it's a standard contract as this employment service provider, and you use the same contract over and over for your customers, I probably won't ask for all of them, but I'll ask for the standard language that you utilize and ask for a sampling of the contracts for which you have executed. I will also ask if amendments have been entered into. We're going to talk about that in just a couple minutes with test your knowledge. But you can amend a permanent placement contract. Do not fret. You say you're going to need 10 employees, you turn out you only need 6. Or you need 10 and you actually need 12. We do take amendments into consideration. Again, we are also going to request and review invoices. This is required per department policy and court ruling because we want to know, does what you pay for or what you sell actually substantiate the contract language? I will tell you, in my years of auditing and working with both customers as well as sellers claiming this exclusion, that often this becomes a major problem because the activity from the invoicing does not support the language of the contract. We have several cases, as I previously stated, that have been litigated on this issue. They are here for your reference. You do have access to them. These are public documents, and there are 2 pages of them. I would like to read this statement. The department is aware of pending litigation, AM Castle and Excel, that does impact the exclusion found under Revised Code 573901JJ3. However, the department disagrees with the determination of the BTA and has appealed these cases to the Ohio Supreme Court. Due to these pending appeals, we will not focus on the potential impact of these decisions in this session. The discussion we have had thus far today and will continue revolves around how the department historically and currently interprets and applies the exclusion found under Revised Code 573901JJ3. We are going to be focusing on the performance and the language of the contract. So let's test your knowledge. Engineering Inc. decides to outsource their office staff, including 1 office manager and 2 secretaries, to ES Service Company. The executed contract stipulates that the staff are permanently assigned for at least 1 year. The contract in this situation further stipulates the monthly fee charged is $4,500. Is this taxable? As you see, I already answered it for everybody, but don't answer it on the web, please. As long as the review of the invoices during an audit shows continuous monthly invoices/payments of $4,500, this service is not taxable. It is still deemed employment service, it is just not taxable. Let's test your knowledge a little bit more. Manufacturer A needs staffing to maintain/repair their facilities. They hire ES Company to provide that staff. An executed contract stipulates staff are permanently assigned for at least 1 year. The contract does not stipulate the number of staff that are going to be filled or the positions that they're going to take. The services are to be billed based upon completed timesheets, daily timesheets. Is this considered taxable employment services? Based on only the contract, this would not be taxable employment services. However, a review of the invoices shows fluctuations in the number of staff. And by that, I'm looking at the number of staff that are there for a regular work week. Month 1, there are 3 staff there, 40 hours a week each. Month 2, there are 5 staff there, 40 hours a week. Month 3, we go down to 2 staff. And if you think about this on a graph chart, you're seeing the ups and downs. The remaining months also show fluctuations. So, based upon a review of the invoice and testing of performance, does this meet the exclusion? No. This is deemed taxable employment services. Even though the contract language stipulates permanent placement, the activity invoices do not support or defend this assumption. Performance will trump intent, or in other words, actions speak louder than words. At this time, we are going to pause to recognize the code word. The code word is employment. The next exclusion, number 4, is transactions between affiliated members. The key to this is that there must be affiliation as stipulated in Revised Code 573901B3E. One person or business must own or control the business operations of another member or group. In the case of corporations with stock, one corporation owns or controls more than 50% of another. Federal attribution rules do not apply. So in real life, let me give you a scenario. We have 3 independent, separate legal entities, separate companies. Company 1 fabricates piping for the water company or for your home. Company number 2 delivers that pipe to my home or to a job site, and these are all Ohio companies. Company 3 will install that pipe then. All 3 companies have employees. All 3 companies have followed Loretta's rules with regards to establishing themselves as business, doing all of their employer withholding, and filing appropriately. However, all 3 companies decide to merge together, and a parent company comes in and buys all of the companies out. We now have a parent that owns 100% of 3 distinct subsidiaries. All 3 companies continue to maintain their own employees for a time, therefore they're all filing their own IT 941s at the end of the year or quarterly. Please forgive if I use the wrong form name. They're doing all of their own reconciliations, making all of their own payments, and that becomes cumbersome. So at some point, all 3 companies decide to transfer all the employees under the parent. Set up a new FAIN number under the parent, all of the employees transfer over, and they're all together now under one legal entity. However, the parent company is incurring expenses but doesn't make any sales. They're not doing any billings. They're there as pretty much a shell company. So what happens is each month they invoice each of the 3 subsidiaries for their respective payroll services. Does this meet the exclusion under JJ4? I am throwing this out as an example. I would say yes, but the specifics of your case, your taxpayer would prevail. In this case, all other things being equal, this appears to be employment services between the parent to the subs. However, because these are affiliated members, the parent owns the subs, the exclusion under JJ4 would apply. I will tell you, when you ask for this exclusion, I, as the auditor, am going to ask you for organizational charts. I'm going to look at your affiliation schedules. I'm not going to dig into your US 1120s, but I do need documentation to support your exclusion. The last exclusion under Revised Code 573901 JJ5 is the resale of services to another employment service provider. Key factor here is that it became effective July 1, 2007, which was a significant amount of time after employment services actually became taxable, which was back in 1993 per Laura. This exclusion allows an employment service provider to resell their services due to a shortage from another employment service provider's staff. I will tell you that this is very narrowly construed, and to justify this exclusion, the resale exemption, I will tell you that a not all-inclusive list of things that I will ask for in an audit situation will be sales records, invoices, contracts, purchase orders, statements of work, payroll records, and or letters of usage. Letters of usage are very key because as we test your knowledge, let's tell you that ES Provider A is going to provide 15 groundskeepers for an upcoming concert at the Jacobs Field, up where I live in the Cleveland area. but they don't have the staff to be the groundskeepers to clean up for that. I would tell them as a taxpayer, I do not want you to ever lose a sale. Go into that sale. And you tell me I don't have the groundskeeping staff. I don't want to have to pay sales tax to XYZ provider to get those 15 groundskeepers. What I will tell you is does this meet the exclusion under test your knowledge? And yes, it does. When XYZ provider gives you the personnel, the 15 groundskeepers, and charges you the fee, you are giving them an exemption certificate claiming resale. You, as the end service provider to the concert hall, however, are to charge sales tax on the employment services you provide. Some miscellaneous issues that we will finish covering and then turn it over for questions are, again, what about customers claiming exemption and our auditing procedures? If your customer is claiming exemption under revised code 573902, and as Laura stated, it was churches, governments, 501c3s, I will tell you there are probably more than those, but those are the ones we run into the most. As the employment service provider, obtain a fully completed either blanket or unit exemption certificate. As the customer, instead, make sure you have those. And I will tell you, working with taxpayers on the spectrum of all, if you're one of these exempt organizations, you know what your exemption is, you know how to fill out the form. So as an ES provider, don't go looking to have, asking your taxpayers as they should know their exemption for that. We don't cover it here, but if you have any questions about what a fully completed exemption certificate is, at the end you'll have my contact information as well as Laura's, and you can email us, call us, and we can explain that further. Customers, however, that are claiming one of the 5 exclusions will not be covered by a blanket or unit exemption certificate. And in an auditing situation, this is tedious for both you and for me. How do I know what exclusion you're claiming? Unfortunately, we work with Laura and legal. We're looking at this issue, but unfortunately at this point you have no form with which to cover you for this exclusion. If you are claiming it, or if you're the service provider and your customers are claiming this exclusion, obtain as much documentation as possible to substantiate the claimed exclusion. In an auditing situation, the procedures may include determining if you have employment services at all. Employment placement is not going to be as consistent. You hire a CFO. You're not hiring a CFO every week. So employment placement we're going to see when we're doing our review of transactions. But employment services we want to identify as close to the onset of the audit so we understand what's going on. We're going to review your chart of accounts. I've seen many times where it says outsourced personnel or temporary employment. I've worked with an auditor, however, before that temporary employment or employment services that turned out to be temporary were being charged through or recorded in the wages and salaries account. So we're going to look at your chart of accounts. We're going to conduct facility tours, and these are all standard auditing procedures. But a facility tour will help us to understand how many shifts you have for staff. Are they all personnel, or are they outsourced individuals? We're going to look at and learn your operation to understand what's going on. Obviously, as I stated before, we are going to review the contracts. We're also going to ask for the invoices. Exemption certificates claiming resale will be reviewed and scrutinized to determine if the customer is truly reselling the services. Please, as an employment service provider, do not go out there and get all your vendors to give you resale exemptions. It is narrowly construed and will not be accepted if it truly does not meet the exclusion under JJ5. Exemption certificates claiming manufacturing may be fully completed and it's a proper form. However, it will be denied. There is an information release with regards to this. It is because of the Belmar Parts case that has been litigated, which is in your PowerPoint, that manufacturing and resale, broadly interpreted to be exempt, do not qualify. I always tell my taxpayers in an auditing situation to remember this is a two-way street. Keep communicating with me. Keep communicating with your auditor. Be open and forthright with the documentation that you provide. I can't tell you in the other binder I have that has all the court cases that Laura and I have cited, the number of cases that the taxpayers have not provided the information at the audit level. Now, I understand and respect that that is a decision each taxpayer makes on their own, but as the auditor, I want to keep the relationship open and moving forward. As much as I can make taxability decisions at the audit level for you and for me, the better it is. Sometimes we have to agree to disagree, but I'd rather keep the lines of communication open and keep receiving the documentation. If you have any questions or concern, here is Laura's information as well as mine. Please call anytime. The email is always open. All questions are good. All questions are wanted. However, a question that requires additional information may take us some time to respond. And if you are under an audit situation, please respect that we will defer to the auditor and staff that are handling your case. We all work to support each other, but we do want to keep the chain of command and go through your auditor. You can request a tax commissioner opinion, and that goes through Laura. However, again, it will be scrutinized to determine whether or not you are under audit. That trumps everything. Though not stated here, if you do need access, we have information releases on our website regarding sourcing, which Laura spoke about, employment placement, and employment services. And please remember that we're talking about two very specific services. There are other services that auditors will look at, which I will not be going through here. At this time, I am going to turn it back over to Loretta, who will answer any employer withholding questions you have. And if we have time, Laura and I will then answer any questions on employment service / employment placement service. And thank you all today for your time and attention.
Hi, we have a few employer withholding questions from the audience. The first one is, can a quarterly filer of withholding taxes opt to file and pay monthly? You are a quarterly filer, however, you can still remit your payments monthly if that is more convenient for you. You are still listed as a quarterly filer. During the look-back period, if you have exceeded the $2,000, you will be changed to a monthly filer for the next tax year. But in the meantime, if it is more convenient for you, you can remit the payment monthly. And the next question is, if a company has locations in Kentucky and opens a location in Ohio, how do you know if the city or township tax is required to be withheld by the employer? Our tax finder on our website can be used to determine if there is tax due for a municipality as well as school district, and also sales tax. So you can use the employee's address to find out if there are other taxes required. You would then need to work with each municipality on their actual filing requirement and remission of payments. If neither magnetic media or electronic sending is available, what do you do? If you are less than the 250 statement requirement, you'll just keep the paper forms, the W-2s, in your files for at least 4 years. If you have more than that and are required to submit it electronically, you'll want to contact our office and speak with someone about that so we can find out why it is not available and what your situation is, and we'll come to a conclusion at that time. Are IT3 required to be e-filed this year? The IT3s are not required to be e-filed this year. As stated during the presentation, the 5707-719 amendment has been withdrawn, so you are not required to do any electronic filing of the W-2 statements, the IT3s, or the 1099s for the 2015 tax year. But you'll want to stay alert for any changes to that in the future, but it is not required for the 2015 tax year. And another question from that person is, are all employers required to submit W-2 copies regardless of the number of W-2 forms? No, you are not. If you fall below the 250 requirement, you are not required to submit those forms. The 250 or more are required to be submitted on magnetic media or the CD-ROM. Below that, the paper forms are to be kept in your files. And that answers their last question, which is, can paper W-2s be filed with OVT? You want to keep the paper W-2s in your file for the minimum of 4 years. Are the W-2s required to be filed with the IT3? Yes, if you meet the 250 or more statement requirement. You're going to send in your magnetic media and your CD-ROM and attach your IT3 to it. However, if you are not required to send in the W-2, you still need to send in the IT3. Do small employers have to file the W-2s on a CD-ROM? No, you do not. You can do so voluntarily, but if you are small in number, meaning that you do not meet that 250 or more statement requirement, you do not have to send it in on the CD-ROM. I have an employer who refuses to pay anything electronically. Is there a waiver available? There is an opt-out form on our website. You'll need to complete that and send it in to the Employer Withholding Unit. It will be reviewed for your case. These are done on a case-by-case basis. You can take a look at the FAQs also to find out about opting out. Generally, it's for groups that do not use electronic means for religious purposes. However, we do want you to fill out the form, and we will take a look at it and notify you whether you are qualified for the opt-out or still required to file electronically. Are small payroll companies required to use bulk filing for reporting and withholding in Ohio? Payroll companies are required to do the bulk filing. However, if you believe your company is such a small entity that it wouldn't be feasible, you'll want to contact our department, and you can contact specifically Alan Moore, and he will discuss the bulk filing process with you, as well as if you are able to meet your filing requirement through the Ohio Business Gateway. Can a quarterly filer, okay, we've already done that one, withholding monthly instead of quarterly. So you can go ahead and submit it each month if it is convenient for you, but you are still listed as a quarterly filer. And I just want to restate for you the 5707-719 amendment that has been withdrawn. It will not be available for the 2015 tax year. but you want to keep an eye out for that for future tax years. Thank you.
Thank you, Loretta. We do have more questions than we can cover, which we will make sure are answered. But the one that we are going to speak of is, are those hired as nursing supervisors or department heads treated as taxable employment services? I hate to give you an answer of it depends, but we would want to look at the facts and circumstances of your case. Having some knowledge of this from my previous job many years ago, I know we had nursing supervisors that in a pinch would provide for patient care. However, as an auditor now present, I would tell you I would want to look at the job description for that nursing supervisor, any contract you have, and or invoicing that you would have for that. So, apologize that I can't give you a definitive answer. It depends on what that nursing supervisor is responsible for. At this time, again, thank you, and I'm going to turn it over to Marina.
Thank you, Loretta, Deborah, and Laura, for the information you shared today. Before we conclude our webinar, there are a few announcements we want you to be mindful of. Some of you may have heard from your colleagues and coworkers and peers that they were unable to get into today's webinar because we reached a maximum capacity of 1,000 people, and that's just based on the license that we currently have here at the department. So we are in the works of getting another program, the exact same program, approved for CLE and CPE credits. So we do ask that if you know of anyone who is interested who was not able to attend today, please be on the lookout on the Ohio Virtual Tax Academy webpage. Also, if you have not, or if they have not signed up for our tax alerts, that will serve as the department's #1 communication tool to everyone regarding any future OVTA, including the one that we're hoping to get on the schedule for this year, which is a repeat. Now, for those of you who were fortunate enough to be able to join us today, your opportunity for your next OVTA will be next year on February 17th, 2016. The next announcement is in regards to the identification of code words. At the conclusion of today's webinar, once you exit today's webinar, you will have the opportunity to upload those questions and you will receive information through a link. Once you receive the link, you will have the opportunity to answer the questions and upload your code words. Please remember that you need to identify those in chronological order. Remember that for those of you receiving CPEs, you will receive an electronic completion certificate, and it will be sent to the email that you used to register for today's event, and that will be sent to you on Friday, December 4th. And for those of you receiving CLE credits, you will be able to visit the Ohio Supreme Court's website and see that your credits have been posted accordingly also on Friday, December 4th. And the next announcement is in regard to our webinar evaluation. We here at the department are looking forward and interested in your feedback in regards to today's program, and more specifically in regards to other topics that you would like to see. So at the conclusion of today's webinar, you will receive an email link that will allow you to take a SurveyMonkey to give us any feedback that you would like in regards to our program for today. At this time, one more announcement. The final announcement is in regards to FAQs. Please be mindful that we do realize that we may have been unable to answer all the questions that came through today verbally or via chat. But by Friday, December 4th, if you visit the web page that you used to register for today's event, you will be able to see all of the questions and the responses to those questions. So once again, that will be on Friday, December 4th. And at this time, that concludes our program for today. Please govern yourselves accordingly, and we will see you at the next Ohio Virtual Tax Academy. Thank you so much for being in attendance today.